Since the time you understood the importance of savings, the piggy bank or your tilt has been your best friend. As you grew younger, the tilt was replaced by the bank. But have you ever thought, why would a bank take the responsibility to keep your money safe for you, and how the bank benefit by doing so? The simple answer is to create more money. But how do they create more money? Is it even legal to do so? If the bank doesn't keep my money, what do they do with it? I know at this point you must have so many questions. Don't worry, the business of banking is not complicated as you think. What's the purpose of a bank anyway? For most of us, it is to have a safe, convenient place to store our money. But banks doesn't keep our money safe just to make our lives easier. Unlike every other business model, the motive of the bank is to make money. The name of the game is collecting interest. Whether it be credit cards, insurance, mortgages, the more the loans the bank gives at a higher interest, the more the money they make. But loans itself is nothing bad or new. After all, many businesses were able to build through loans given by the banks. The money we use in the present is called fiat money, which is paper money, which has given a certain value to it by the government. In this fiat money system, the banks had become wizards.
I'm a what?
A wizard, and a thumping good one, I'd wager.
With the ability to create money out of nothing.
I love magic.
The magic happens when you walk through the big glass doors of the bank and make a deposit. Here's how it works. Let's say you get a paycheck of $10,000 and you deposit it into your bank account. Let's pretend that only you, the bank, and Frank, who the bank lent out money to, exist in this imaginary world. You have your $10,000, the bank and Frank has $0. So the money in circulation or the money supply is only $10,000. Even though you deposited the money in order to use it later, the bank won't let money to lay in their safe when they can earn sweet interest of your money.
And so this bank says, look, we are in a world where our reserve requirement is 10%, which says that the bank only has to keep 10% of these cash reserves and then it can loan out the rest. And so it does that. That's its business model, or a significant part of its business model.
So they lend out $90,000 to Frank at a 5% interest so that Frank can start a new business. All of a sudden, Frank has $9,000 and you have $10,000 as digits in your bank statement. And now the money supply has magically increased into $19,000 and the bank gets to collect 5% interest of the loan they provided to Frank. Banks create money by lending out money that they created magically out of your money. But before you stop watching this video and start to Google how to start a bank, wait. So just like you, Frank also doesn't want to keep his $90,000 with him. Therefore, he deposits this $9,000 which he got as a loan into the bank. So guess what? As banks are here to make money, and since they only need to keep 10% as reserves from a deposit, the bank gets to keep 90% of Frank's deposit and lend it out as a new loan, and the money supply gets increased like magic. And banks get to enjoy sweet interest of the loans. Expand this small scenario to the world, and you have the entire banking system of creating lending money. This is also called fractional-reserve banking, where the bank gets to keep a fraction of deposits as reserves and lend out the rest to make money. Since the people who deposit money has the right to withdraw money anytime they want, the money which is created from the depositors' money are purely money which is created through pure magic. And this is what which makes the banks the most powerful business in this world. It's the only business where people happily give their life savings to, that the banks can create more money and collect interest. But what if the customers who deposit money to the bank wants to withdraw more than 10%? Enter the holy life savior of the banks, the one and only government who came up with FDIC, which assured people that if banks fail to give back the money of their depositors, that the government will pay to the depositors on behalf of the bank. But the problem gets much worse, as now the banks are legally and financially backed by the government. The bank now has the potential to risk the depositors' money or our money with the intention to make more money, which lead the government to bail the banks out of these risky lendings after they file for bankruptcy. So, how magically insane the business of banking is? Well, when you consider that we willingly give our money and they magically create more money out of our money and lend out that money to make more money, and it's legally backed by the government, well, it's pretty much insane. But hey, isn't it interesting that you got to know what happens to your money when you deposit into the bank by a small YouTube channel with barely 10 subscribers? Won't you feel to back me up here by giving a precious subscribe button click and showing your interest by liking this video? It won't even cost you a dime. Now that you are a part of my secret society, I'll hope to bring you more knowledge behind the world of finance through my next videos.